Sande, I think I've connected.
Okay,
Yeah.
so let's wait
Awarabaja
for.
bisangayo tofayo. So you just move.
Okay, let's wait maybe for like 4 minutes.
It is okay.
Mm. Yes, good morning, ladies and gentlemen.
Yes, good morning.
How are you?
Good
How are you?
morning.
Yes, yes. Um, you can take screenshots and share in the group so that we can get more people and we start the class. Yes, we are still few 7, so we can start, but let's take screenshots, we share in the group so that people can join and we start and see what push. Okay, Kwagala. Thanks for joining. Okay, okay. Let me share the screen. Then I think we can start. Others will find us on the way. Everybody see my screen? Hello. Excuse me. Hello.
Yeah, we can see it.
Okay. I think then that I remember last time we were looking at the price patterns. Yes. We looked at the price patterns and we are looking at candlestick patterns and we looked at how candlesticks are formed. We looked at the different types of candlesticks, how they are formed in the market, and how they affect the what? How they give you what? Confirmation for an entry. Yeah, today I want us to talk about yeah, there is a time I thought about head and shoulder and inverse head and shoulder. But there is a guy who said he wanted us to repeat that class. Maybe if he's here, I'm going to repeat it. But if he's not here, I think we shall go to the next thing. Are you there? It was at night on Friday, Thursday. I thought about head and shoulder, then inverse head and shoulders, how they are formed in the market and how they are used to get signals. But if not, I think we can continue. I want us to look at one thing, what we call. I want us to look at what we call triple triple bottom and triple top. Triple top. Yes. This one is also part of the what? Triple bottom and triple top. Of course, this one is also part of the what? Price patterns. These are part of the trend what? Trend reversal patterns. Yes, trend reversal. If you hear the word trend reversal, it means if we are in an uptrend, we're in an uptrend like this. I hope these things, you know how an uptrend is formed. Then we experience what? A triple what? Let's say if you look at this one is an uptrend. You get it? Then trend reversal. If you hear trend reversal patterns, it means those are the patterns that happen within the market and the market changes the what? The direction. It means if we have been in an uptrend and we experience a trend reversal pattern, we shall see ourselves coming to a downtrend or the market changing to a different direction. It may not necessarily mean a trend, because when we talk about trend, it is a very big concept. Okay, it can be for a short-term trend or a long-term trend, because it can be an uptrend for, depending on the time frame you're using. In one day, we are in an uptrend. Even someone look at the analysis in 1 hour and you see, you can go to 1 hour, you find there is a what? A downtrend. So depending on which time frame you're using, can have a long-term trend and a short-term trend. So anyways, wherever it is formed and can confirm me what? An entry in the market. So we have been in an uptrend like this and we experience what we call a triple top. A triple top. You can see here. Let me draw. If you look at this, we are seeing it forming. We are seeing it forming a what? A top here. Coming. Of course, it's like how you see, if you have been following the classes of how I've been teaching about the double tops and the double bottoms, the same concept, only that this one just forms 3 tops. You get 3 tops and 2 bottoms, or what we call neckline. Sorry, neckline. Yeah. When you look at this, yes. Then we have this. Then what we see, we need to see the market coming. Of course, it has been an uptrend forming lower high, higher high and lower high and higher low, higher high, higher low, higher high. Then after that it comes to form this higher lower higher low. You get? Then in the process of pullback, we see ourselves having what? A failed high. You get? A failed high. Failed high means two highs at the same what? This one failed exceed this previous high. If this current high failed exceed this, experience what we call a failed high. You understand? So if we see ourselves failing to get this, now we start in our mind. Get if you have your coins and you have been following it very well, in your mind it starts to come and telling you that we are about to change the what? We are about to form for the first year. We are going to form what we call double top here. If you can see this, like this, like this. Now you wait for this one to form a double top. But when it reach here on the neckline here, neckline, this is the neckline. You get? It fails to break below this. You get? When it fails to break below this neckline, now you wait for it. Is it going to go above this or here? If it comes and tests this line again, it means it has formed the third top, meaning that one now confirms to be a triple what? A triple top. Then you wait for the market to come and close above this impulsive move, and we see this market should respect this. You get? Hope you guys are able to see my screen. Hello? Is everyone able to see the screen?
Yeah.
Okay. My network is not okay. I don't know. So we need to see the way we trade the downtrend. Of course, before you get an entry, first to be sure of which trend are you in. Those things I talked about them. Okay, I'm going to talk about that in front there. So the way we trade the downtrend, of course, we'll be having our support here. After forming this lower low, you draw support. So we need to wait for the market to have a pullback. Or what? Yeah, a pullback. Then we need to see this market coming back and respect here. After respecting here, it doesn't close below this. Confirm that the market at least is going to first push a little bit higher before it continues down. So here you take a very small percent. Remember, when we're in a downtrend, any time the market can fall. Just know that you take a very small percent, like 2, and move out of the market 2 to 3. Okay, don't exceed 3. Okay. Or sometimes if you have done your technical analysis very well and you can see you can hit 5%, then the better. You can do that. It has no problem also. You understand? Yeah. So that's how we trade a downtrend. That one I was just getting it from here, that if you see us ourselves forming a double top, yeah, now you need to understand that now we are in a downtrend and change the direction of trade, and you change your strategy of trading, of course. Then now let's look at that one. We are done with triple top, and let's look at triple bottom. Triple bottom. Of course, triple bottom happens when we're in a downtrend. Though sometimes these ones they are not easy to be found in the market. You understand? They are not easy to be found in the market. Yes. So what it has, of course, it has. If you can look at this, has bottoms, and these are bottoms. This one, and this they are bottoms, and they also have and principles are the same. The other one, if this one are bottoms, the other one will be tops. Then we look at this that is a neckline, neckline. Yeah, measure that neckline. Then we'll show you what we yes can consider termination zones, so not necessary. Yeah, so also we in a downtrend and we see the market coming from this. Of course, in a downtrend we form what we call lower lows and lower highs. So we are forming a lower low. The market is coming to form a lower high. Of course, after that pullback, we see the market moving down. Of course, when it is moving down, in our minds we're expecting to see a new lower low. But now the market fails to break this level. Like the way I was telling you how we trade in a downtrend. Of course, when it fails here, we expect the market, the next target is here. Here you can be trading. Here like it can be like a sideways what? A sideways market or consolidation market. So now we see this one. Now someone who understands, like who knows, like you have your conditions and patterns. Like if you see this one formed, I must enter into the what? The market. You get? If you see this one happen, I must enter into the what? Now for me, when I find this, I will know maybe we are going to form a double bottom. Then I wait, have we formed a double bottom or no? I wait.
Okay,
Now my what comes into my mind is that I am expecting this market to continue down. But if it reach here and I respect this this level that we have here, you get this level. Now I start on my mind what comes now is a triple bottom. Now, when I see this
yeah,
triple bottom formed and it close above this, then I'm good to what? I'm good to go. You get? I'm good to go. So that's how this one is formed. It has three bottoms and two, we can say maybe two crests. Yeah, yeah, like that. Then we need to see a sharp, like if it closes above this, now we are sure this market is going to go up. Why? Do you know why we say this? Like if you go deep and they understand very well, it's not that okay they are bottoms, but if you see why they say that if the market is going to up, here the market has respected this level, then it has tested it 3 times. You get?
you first share the
It has
screen. You are
tested
not
it
sharing
three
the screen.
times, and the market can't penetrate here. Meaning that here there is a strong support. There is a strong support. You get? There's a
But
strong
again, I don't
support.
worry about it.
Hope you understand that. Meaning here there is a strong support, and sellers cannot penetrate this support. Meaning that we are most likely to go up. So that's about it. And yeah, then that's what I had for price patterns. Then I also have,
You click back.
I know some people you can be having your technical analysis very well, you know those
Yes,
patterns, you know whatever, but some fear to get entries. I understand that. Some fail to get when to enter into the market and exit. So I have okay for now. I have my formula here. I will try to explain. to go through it for you. C E
Bravo. Kyaganya
T.
okukola.
Get. So this one stands for
Nyiga ku add funds.
stands for what? For what? It stands for condition.
Onyizeo.
And this one stands for entry.
Why?
And this one stands. Is it the right? Is it the right spelling? And this one stands for target. Yes, you have these three things. For me, like me personally, that I follow when I'm trading, because you can be just there, you know, technical analysis, you know, each and everything, but you even fail to get what to trade. One, condition. Under condition, what do we have? Under conditions, let's look at what? Conditions. Conditions. Which conditions do you have? One, you can first look at like the general structure of the market. You get, look at the general.
Let us use the you share screen. I'm not sharing a screen.
Look at the general.
Kanyige sharing wano tulabe.
Structure
Okay, kati minimizing ogende ku Binance.
of the market.
Go to your Binance.
To get the understand the trend. In three. Three, what do we look at? Look for price patterns. Price patterns and price patterns and candlestick. Candlestick.
You allow that peak.
Candlestick.
I have read and have confirmed. Then quarter peak
Candlestick patterns, yes. Yeah, majorly that. So now you've woken up, you got charts, and you want to get an entry in the market. You get, what do you consider first? First look at the market, general market. That one happens. I told you, when you want to do your technical analysis, first start with higher time frame as you're scaling down. If you're a swing trader, start with 1 day, 4 hour, then sometimes you can go to 1 hour to confirm the what? Entry. But the general structure of the market, you just look at it in higher time frame. You understand? That's give you a clear picture of what is going to happen. You get, like, how do you know that we're in a downtrend? Of course, you can't go to 1 hour, then you know that the general structure or the general trend of the market is a downtrend. No, go to 1 hour, go to 1 day and see what's the trend there. Because you want to trade within a day. You're a day trader. You understand? So when you're a day trader, you can't get a trend within 1 hour. No, you need to go into higher time frame and confirm which trend are you in. Now that one you have seen the general what structure of the market and the trend. After seeing these two, now another condition is price patterns. Now start looking for double tops, double bottoms, those things of head and shoulders, inverse head and shoulders. You understand? Or some people can, yeah. Also here there's also another thing. What we call number 4 is supports and resistances. Of course, so I saw it of course, we
mitwalo abiri.
teaching technical analysis is okay, but each and every these things, and we can't show you how you can easily use them to enter into the market. Also, I don't see it what very important. But if you understand your trade, your technical analysis, and you can know when to enter into the market and exit, that one becomes the best way of trading. Yes. So after seeing this, you have seen price patterns and supports and resistances. Then some can use candlestick patterns maybe after seeing supports and resistances and enter into the market. You get? So after seeing the condition, now we go to another thing, entry. Entry. What do I mean by entry? Entry. What do I mean by entry? Some people you can after seeing these, you have seen these price patterns, double bottoms and tops, supports and resistances, but some can fail to get entries. I'm telling you, you as a person, you need to set your condition for entry. Even if you're not using price action, you're using what? An indicator. Each indicator has its entry. You get, of course, for indicator, this one will be covered for you. This one will not will be covered for you. Just put an entry and an indicator and look for what? An entry. You get. But also when you're using price actions, you need to know what is your entry. Which conditions do you have for entries? Some trade a breakout, some trade candlestick patterns. Yes, you understand? Yeah. So or some trade volume. You get volume of the market and something of that. We shall go to the charts and look at that. Then also targets. Some enter into the market and they don't know their target. Target means what do you want to take from the market? Of course, what to take from the market, it's not that you will wake up and say, I need 4%. You go, you get your entry, then you say you want 4%, depending on what. There are some conditions that should be considering, of course, supports and resistances. Or if it is a double bottom, what do you consider to take percent when you have seen a double bottom? Hope you can note these ones and let's go to market and see. I will start. I remember last in the class where MRD brought this one for you like this. I taught this one. These things I just taught them before it was formed in the market. Double what? Double bottom. You can see it very well here. When the market moved down, we can see it was formed here. Very, very well, very okay. So now we have gone to the market. We know the market when a downtrend. This one I even don't need to do what? To talk much about it. If you can see, we are forming lower lows. Now everyone should be knowing how to understand the trend. We formed the lower low here. The market came and formed lower high. At this point, we came and formed another lower low. You can see lower high. Sometimes, okay, when you're considering the lower highs or the different levels, now someone can say, why not this? Here, we in a retracement, you get. This one we just call it, or we can call it a correction or a retracement. But the general, we look at what was the highest level. Of course, this one is above all these ones. So we just ignore this and consider this. And this one should not exceed the previous lower high. So we consider this. Then we come. Someone may say this one, no, is this one below this? So this one can't confirm to be a lower low. We can see this one, which is below this, and confirm it as a lower low. Now, we have confirmed that we are in a lower, we are in a downtrend. And in downtrend, we are seeing ourselves forming a very good, very nice one that can even be seen by a blind person. Double bottom. very clearly. So I was telling you for entries, some people can consider candlestick patterns, and some people can consider breakouts. Some people consider retest. You get a breakout is what is like this. After this one formed and the market has, of course, I told you trade when the market breaks the neckline. You get, but some people can come here and trade when they see it is almost being formed and it is respected. They come and they immediately trade here. Like someone after seeing this, one top, one bottom is formed, another bottom is formed, and this candlestick close, and he has confirmed that this bottom is also formed. You get, like the market has respected the what? This level here. You get that the market has respected this. People enter. Why? Let me give you one reason. Someone will consider what we call price candlestick pattern.